Yo, what's good, guys, man? It's the last video of the series. This will complete my strategy, bro. So today we're going to talk about psychology. Discipline versus psychology. Remember in the last video that we talked about discipline? Psychology is the cause and discipline is the effect. Discipline is what you're supposed to do and psychology is why you don't do it. You can have a great strategy and still fail mentally. Your strategy fails at the speed of your emotions. That is very real. I forgot where I saw that, but I decided to throw that in there. Number 2, the core emotions of trading, the big four. Remember how we talked about FOMO, cutting winners early, greed. That's all psychology. Discipline and psychology play hand in hand, but like I said, discipline is what you're supposed to do, and psychology is why you don't do it. It's just So let's go over it again. Fear, cutting winners early, hesitating on valid entries, moving stops to break even too fast, greed, not taking profit, oversizing after wins, just one more trade. That's overtrading. FOMO, fear of missing out, chasing moves you missed, entering late without a stop loss, trading outside your plan. Your ego's a big one. Don't let your ego get ahead of you in trading. You should not have an ego when you trade. Remember, everything is supposed to be systematic. Needing to be right. Refusing to take a loss. That was a big one for me. I used to refuse. I used to be like, man, there's no way I'm losing today. Like when I went on that losing streak, man, I was refusing. I was like, dude, there's no way I'm taking a loss, bro. Not today. Well, guess what? I kept taking losses. Revenge trading to prove something. Revenge trading, we talked about that in the last video. You should know you shouldn't be afraid when you trade. You shouldn't be greedy. Shouldn't chase. You need to be patient and rely on the strategy and make sure your mindset is clear. Why losses hurt more than wins feel good. A $200 loss feels worse than a $400 win. This causes early exits, hesitation, strategy hopping. Your brain isn't wired for trading, it's wired for survival. So matter of fact, let me pull up a video. Trading. I'm going to have this linked in the description, but there was a video I watched by this guy, and he helped me out a lot with my psychology because he said, okay, once your brain is in that emotional state, you switch from being systematic to your brain goes into defense mode. And he basically said your mind is like a hungry tiger, and you're just fiending to find some kind of satisfaction. And I've been in that state many, many times. And in order to get out of it, remember, we promote good habits, not negative habits. A lot of people won't tell you this. I had to search for this answer, and it was right in front of my face the whole time. I just didn't understand it. But now I know. You don't want your brain to go into that defense mode, that wired for survival. That's real. That's what your brain does. Like we naturally have a survival instinct. So when you lose, you're just figuring out how you can get it back. You're emotional. You don't want to be emotional when you're trading. Okay? I'm going to link the video in the description. The tilt cycle. Walk through it step by step. Normal loss, emotional reaction, rule break, bigger loss, revenge mode, blown day week, how tilt starts before you notice. Okay? So you can take a regular loss and it, like let's say you take a planned trade and you lose, okay? But you're not all the way there. So you take a loss and then you react negatively. You always got to think positive, because when you react negatively, let's say you take a loss and you're like, man, I can't believe I just took this loss. Like the strategy's right, everything's right. I don't know why I'm losing. Then that's what's called an emotional reaction. Then it causes you on your next trade. You're like, okay, I can't lose again. So I'm just not gonna set a stop loss. So regardless what happens in the trade, I'm gonna just walk. I'm Yeah, regardless what happens in the trade, I'm gonna make money. Like you think you're gonna make money, and then it could happen, but then you could also get humbled, which happens more than you think. Revenge mode. So you break your rules. Let's say you don't have a stop, and then you had to close it for a bigger loss. Now you're mad. Now you're mad, and you're like, all right, bro, I need to get back. You're emotional at this point, so you're like, all right, bro, I'm hopping in another trade. So you go on the charts, and you're just like, okay, what looks the best? What looks the best? What can I take? What can I take? Oh, okay, NQ. Oh, all right, and then you just take a random trade, and chances are you're gonna get stopped out, and you lost more money for the day. And then you think to yourself, you're like, there's no way I just did that. Like, why did I do that? There's been so many times where I've done that. This process happens more than you think. But if you keep your losses controlled, you keep your mind level, and you make sure after you take a loss, you walk away and you just take a deep breath, gang. You won't deal with none of this. It's easier to do what's not right and not follow your rules. But the more that you follow your rules and build that discipline, you're going to see results. Okay? Confidence versus overconfidence. Important distinction. Confidence is trusting your process. That's trusting your strategy, your risk management, all that. So that I'm confident whenever my trade aligns with my strategy. Overconfidence is increasing risk after wins. You know, you could be overconfident because, like, let's say, all right, I'm on a win streak right now. Let's say I walked in to today's Monday, and I was like, okay, I'm on a win streak, bro. I'm going to just bank on whatever I touch. Guess what? I might increase my risk. So like we talked about in the last video, let's say I go from risking 500 to 1,000 per account. Well, already I'm breaking my rules because if I take $1,000 loss, I'm setting myself back even further. Why green streaks are dangerous? Because you get too confident, like I just said. Why the market humbles emotional highs? Why does the market humble emotional highs? Because you got to think. Everybody's in the market trying to make it every day, trying to make money. And the market needs to make money itself. So what does it do? It takes people out. It causes you to be emotional when you're not following the rules or anything. Because at the end of the day, you're gambling if you're not following rules. So the market's going to humble you just like you walk in the casino and you think you're top dog and you go on that roulette table and you're like, man, I'm not losing. And then boom, you just get wiped. It's the same thing, bro. Keeping risk the same on winning days. Example, all right, all week I risk the same amount, 500, 500, 500, 500. But if I were to risk more, say, on the next trade, I used to do this a lot. I used to be mad confident. I used to go from risking 1,000 a trade to 2,000. Sometimes I risk like 5 bands because I'm feeling good. And guess what? Bigger losses cause you to be emotional because your brain's not used to it. You got to stick what your brain is used to. Because I didn't build the discipline on 500 a trade right now. So if I were to increase my risk, I have to ease into it because my brain's not used to it and it takes time. That's what I didn't understand for the longest time. It takes time. Thinking in probabilities, not outcomes. This is huge. One trade means nothing. Your edge works over 50 or 100 trades. Judge yourself on execution, not P&L. This is a big one. I'm going to highlight this. Judge yourself on execution, not P&L. It does not matter how much you're up. As long as you're following your rules and you know you're taking controlled losses and controlled wins, that's what you should find satisfaction from. We talked about that in the last video. Okay? You could do everything right and still lose. Very true. Very true. The strategy could be right, the risk management could be right, and everything. And you could still lose. You got to understand that. Trading is like a business. In order for a business to make money, you got to invest money. And you may lose. It takes, you got to lose in order to win. That's just, you just have to control those losses, and your wins will show over time. Consistency compounds. That is huge. Okay? Number 7, detaching your identity from your POL. P&L. Loss does not equal a failure. Win is not skill. Just because you want to trade does not mean you're a good trader. Consistency builds good traders. Losses are not failures. Don't be pissed off when you take a loss. It happens. It's a part of the game. You have to lose to win. Okay? I used to walk in the market every day being like, I'm not going to lose. I'm going to win. I'm going to win. And every time I lose, I'd be like, bro, I'm doing something wrong. And then I'd switch my strategy. And then guess what? I'm just delaying time, delaying progress, delaying everything. If you want to be profitable now, you got to stick to your rules. Okay? Your worth is not your account balance. It does not matter how much money you have. Money does not, you got to understand, bro. Money is just material. This is more a life lesson. Money is just material. A lot of people don't understand that, but it's just material, bro. And you're not worth, let's say you have a 5K account. That doesn't mean that, oh, bro, that's like everything. Unless you invested everything in your account, that's different, which you should not do. When you understand that trading is a systematic game, and no matter how much your account balance is, you can grow it. You could have $100 account if you know how to follow your rules, stay consistent, you have a good strategy, you're gonna flip that account 9 times out of 10. This reduces emotional decision making, desperation trades, and overtrading. The best way I can tell y'all to reduce overtrading or stop it that helped me was say, okay, I'm only trading one trade a day, regardless win or lose. That helped me, and it helped me build a lot of discipline, bro. So if you're struggling with that right now, just know, maybe switch it to one trade a day, bro, regardless win or lose. As even when, like, let's say you take a loss, and you're like, bro, it really went my way, like Wednesday. Okay, we're gonna talk about Wednesday again. If I were to go into Wednesday and I close it for break even and I got in the trade again, what if it turned around on me? You got to think what if in trading. You got to think ahead. Trading's a long-term game, not short-term. You're thinking short-term when you're thinking, oh, bro, I just got to make this money quick. No, bro, it's long-term. Think long-term. Think about your success in the future, not what's going on right now. Okay? Number 8. Pre-trade mental state check. Rate your emotional state. I used to do this. Ask, am I calm? Am I trying to make money or execute? If emotion is greater than setup, don't trade. Exactly. Let's say you just broke up with your girl. Perfect example. You emotional, bro. You either want her back or you thinking like something's going on in your head. You probably shouldn't trade, bro, because those emotions will leak onto the chart. Your life reflects your trading. Okay? Number 9, rewiring psychology with the process. How to train the mind. Okay? We talked about this over and over. This is just for you on paper. Same risk every trade. Same stop placement. Same trade checklist. Same routine every day. Consistency calms the mind. Very true. It is so true. It is so true. I was looking for this answer for so long. Years. And it was right in front of my face. This shit was right in front of my face, but I wasn't seeing it because I was so used to doing the wrong thing. So if you start off on the right step, you're going to do a whole lot better than I did off of it. I'm just telling you. I started trading as gambling. I traded earnings because my coworker was showing me that, oh, bro, when a company comes out with a report, you can just gamble on it. That's exactly how I started trading, and it really set me back now that I think about it. Number 10, how do you improve your psychology over time? Continuing to do this, okay? Same routine every day. I wake up, same routine. I'm not changing nothing because remember, trading is systematic, okay? So I'm going to write that down. Trading is systematic. And with growth, experience reduced emotional reactions. Losses build emotional. I don't even know what that word is, to be honest. Because I was just looking up ideas, to be honest with you. Journaling emotions accelerates improvement. Very true. Like I said, I showed you my journal in the last one. I'll show y'all the trading routine. Okay. Wake up for market open at 8:30 because, you know, I'm in Louisiana. Keep track of market news and economic daily. If you want, I'll put this in there too. Trading routine will be in the, yeah, and then my rules. I used to look at this every day. I'd be like, okay, if I don't follow my rules, I'm going to punish myself. So, A, follow your rules, man. And over time, if you haven't been following your rules like I was, continue to follow your rules as hard as you can, bro. And every time you fail, give yourself a consequence. That helped for me, okay? So, that's it. That's all I got for you guys. And yeah, that's it. That's my whole strategy broken down for everybody. I hope y'all enjoyed, man. I'm going to be posting more videos soon. But that's it, man. Catch y'all later.